What if money didn't just fund growth, but circularity? What if the same capital that built the linear economy could help unbuild it and rebuild something better? Welcome to the world of green finance and circular bonds. In a circular economy, finance isn't a footnote, it's a foundation. Let's break it down. What is green finance? Green finance refers to investments in financial instruments that support environmental goals, from renewable energy to low-carbon transport to circular production. It includes green bonds, sustainability-linked loans, ESG funds, climate risk disclosures, impact investing. These tools are growing fast. In 2023 alone, over $500 billion in green bonds were issued globally. But here's the next wave: circular finance. Circular bonds. Circular bonds are a new class of financing instruments that specifically support circular economy projects. They fund initiatives that reduce resource use, extend product life, recover and regenerate materials, build reuse and repair systems, design out waste from the start. Think of it like this. A city wants to build a circular construction hub that recycles building materials. A company wants to lease appliances instead of selling them. A startup wants to scale reusable packaging infrastructure. Circular bonds can fund all of that, with measurable environmental returns. In 2021, the European Investment Bank launched the world's first circular economy bond, 500 million euros raised to support circular ventures. More are following, from development banks to corporate issuers. Why this matters? Because the circular transition isn't free. Businesses need capital to redesign products, upgrade infrastructure, and build take-back systems. Governments need capital to build reverse logistics and urban mining systems. Investors want to know their money is not just safe, but sustainable. Circular bonds align all three. They offer competitive returns, impact reporting, future-proofed investments, and they're part of a bigger shift. From short-term profit to long-term value, from extractive growth to regenerative growth. Real-world examples. Philips has issued green innovation bonds to fund product take-back and recycling. Amsterdam integrates circularity into its climate bonds to support local circular startups. Development banks are funding circular agriculture and water reuse projects in the Global South. Asset managers are building circular equity portfolios focused on reuse, sharing, and regeneration. The frameworks are evolving, too. The EU taxonomy now defines what counts as circular investment. The ICMA is working on circular criteria for labeled bonds. Transparency is key. Investors want proof. That's why data on resource efficiency, material flows, waste diversion is critical. Circular bonds only work when circular metrics are clear. What this means for you. Whether you're a city planner, startup founder, CFO, or student, circular finance is an open door. It's where purpose meets funding, where mission meets scale. This is the future of investment, not just in profits, but in possibility. This is green finance. This is circular capital. This is how we fund the future, without mortgaging the planet.